Okay, so one of the issues, and you talk about the perfect storm, and it was high energy prices, it was outage at the key power stations, it was then the spike in prices. Some are even talking about the price caps that have been placed on energy by the government as a disincentive to invest. Right now, AGL has to decide where it invests its capital to keep the coal-fired power stations going. It says it will do this, but also to invest in renewables at the same time. Where is the biggest bang for the shareholders' capital in the long term, do you think?
Well, in the long term, the vote's been pretty definitive that there's a move towards decarbonisation. So the company really has to focus on that. You know, there was from all the votes last year, from Cannon Brooks, from the demerger, you know, expectations of the company, they really need to focus on decarbonisation, and to do that, that's the future of the energy for Australia and certainly the East Coast. So at the moment, they're still years off developing enough renewable energy to facilitate the amount of electricity required. So at the moment, we're still essentially stuck with coal power. You know, they're trying to phase them out, but, you know, it comes down to the fact that, you know, we can't be short of electricity, and coal power is still the primary source for AGL and for Australia.
But with so much volatility, one thing that surprises me, you've had Mike Cannon-Brookes going by 11.3% of AGL. You've got Brookfield right now wanting to launch a takeover for Origin Energy. So there's enormous, if you like, interest in buying these energy generators and retailers, notwithstanding the fact that there's so much volatility with government price caps around. Why is that interest there right now?
Well, the interest, I guess, has always been there. It's just the fundamental fact that some of the share prices have been depressed, like AGL's. I mean, it's down considerably, up slightly off its lows, but over its long term, it's still considerably lower. So there was an opportunity there from a long-term capital growth perspective. And if we look at like electricity as a whole, it's one of the backbones of our society. I mean, society as we know it wouldn't function without electricity being generated. So there's always going to be some form of demand for electricity within Australia. And it's a pretty limited market. So any move towards renewables, which the government's crying out for, businesses are, the fact is that, you know, it's still the future and it's the way things are going to go.
And so, in other words, even though there might be short-term volatility, as we've seen even today, what you're pretty grounded in is that long-term there are returns out there simply because of the rising population, of this transition and the need for energy long-term, which arguably raises questions about even the price of electricity into the future.
Yes, I mean, all those factors are absolutely true. I mean, we need electricity. We're phasing out coal. We're building renewables. I mean, the task itself is huge. To generate as much electricity as what coal is generating at the moment is a vast build, not from the infrastructure perspective, in terms of supply chains, in terms of how we do it, how fast we can do it, how effective it all is, how the grid will cope with this. So, look, I mean, there's huge changes coming up, and AGL, Origin, a lot of the energy companies are at the foreface of it. So in terms of investing in these companies, AGL will have a good long-term, you know, potential. There's no doubt that this short-term volatility is exactly that, short-term volatility, but with medium to long-term success.
Jamie Hanna from Vaneck, Australia. Good to chat to you today. Many thanks for your time.
Thanks very much, Ross.